Let's do a little midweek update on Bitcoin. In the previous video, I discussed my overall concern with the higher time frame picture. We got the swift sell-off. I caught an Ethereum short within the haven, and now it's time to see what the next steps are. Throughout this entire video, do not forget the higher time frame levels. Do not get caught up in the intraday price action. Yes, I'll be discussing some intraday trade setups, but don't forget the bigger picture. Higher time frame is always going to be king. So how did I come up with the current Bitcoin trading range? Wow, that's a really great question. Step one was to look for any areas that really jumped out at me. Is there a consolidation period I could use? Anything that I could use to my advantage for a potential trade argument. And what jumped out at me first is this H1 consolidation period before another leg down. So this is a classic level I look for. This is going to be within my range high. So technically my range high level is going to be the top of the consolidation period, but this entire consolidation period is going to be one that I am going to be concerned with, but also a level that I can use as a foundation for a potential trade argument. And the range low was just the wick, so the lowest point of the sell-off. Extend that to the right. Did price wick below the level? Did price spend much time below the level? Yes, it did wick below the level. We did not get any candle closes below the level. So I am making the argument that this level is going to be important for an area of support. And the equilibrium is just 50% of the trading range. It's not a special level, but you can see within this trading range, the equilibrium is actually this H1 consolidation period high. So it really works out quite well for this entire trading range. So now that I have my level set, I need to come up with different potential trade arguments. So always what I do is think of arguments for the bull side and the bear side. I don't want to cloud my judgment too much. I want to understand each side of the argument and go with whatever argument is stronger at the time. So because it's a range and because we are at the range highs, I am playing a trade at the extreme of the range. So when price is either at the range high or range low, it's considered to be at the extreme of the trading range, which is great. So because of that, the most basic and probably the best, strongest setup I would have with this trading range is a sweep of the highs. So a sweep of the consolidation period highs, a fallback within red. The reclaim of red or the range high will be the short trigger for the position. So something like this is a bread and butter setup for me. The invalidation point is going to be the high before the reclaim of the level. Take profit one is probably within this H1 consolidation period before the move up. Take profit two is going to be the range low, probably front run it a little bit. And take profit three may even be a sweep of the lows in here. So that's exactly how I would play a trade like that. Now, will that happen? Who knows? But it's a scenario that I now have in my back pocket. And if we get a break above here, I can sit back and wait for the reclaim of the range high. Another potential short setup, and one that I really need to consider, to be honest, is what if price doesn't actually sweep the consolidation period highs? We really haven't been seeing very many sweeps, which is unfortunate because it's such a high hit rate setup. But because of that, I kind of need to adapt my mindset and my potential trading style for this setup. So in the event there's no sweep, if and when price breaks below the red box. So the red box is the low of the H1 consolidation period here. So if we get a close below here, that will be my short trigger. My invalidation, let's say no other price action happens here and we just get a sell-off here. My invalidation will be the high before the sell-off, or it could be above the H1 consolidation period high, just to give me a bit more breathing room. And then take profit one will be front running the range low a little bit. Okay, so that's also a scenario that I have to consider, and one that's very important to consider because you can't really handcuff yourself to just one setup. Because if it doesn't happen, if we don't get that sweep above, then I'll just be waiting and I'll see an opportunity pass me by, which is not ideal. So I want to have several scenarios at play. So that's really the two setups that I would take from the extreme of the range high. I do believe that this entire region is going to be pretty difficult to break on the first attempt. We have the H1 consolidation period here that I just discussed. We have another H1 consolidation period before a leg down. So just imagine all of the price action that happens here. Even if price were to pump directly to this next H1 consolidation period, it doesn't mean that this reclaim setup would be invalid. I would need to adjust my invalidation period, of course, but I'm still using the same level for potential arguments, right? It doesn't mean I have to sit back and like cry that I missed a setup. It's not that serious because it went a bit higher than I anticipated. It's not like I would have been in the position anyway. In the event I don't get the reclaim, price would maybe bounce from the range high. That's perfectly fine because I wouldn't have triggered the short setup yet. If anything, I could look for another short from in here. Let's say there's a sweep above that consolidation period high as well. I could look for a short setup based on that and then take profit 1 within the range high, right? That's perfectly acceptable as well. Take profit 2 at the equilibrium, take profit 3 at the range low. That's classic. That would be perfectly fine as well. So I don't want to handcuff myself to this entire range or one specific setup. As we could see, we just went through 3 perfectly valid, great arguments that could happen on the short side. So now it's just a waiting game and being patient, because would it make sense to short from exactly right here? No, it wouldn't, because we still haven't broken any specific level. Yes, we are at an area where I feel that price will have difficulty to break through. But does that mean that I'm going to be correct? Does that mean I should short now? No, I have no confirmation of that argument except for a red box and an H1 consolidation period. So I discussed potential short setups, gave several options for the short side. Now it's time to discuss potential long setups. And I'll be using the same foundation levels and just applying them differently. So first is a long on a full reclaim of this H1 consolidation period. So very classic. The trigger will be on the retest of the H1 consolidation period or the range high, same exact level. The invalidation point will be the low before the reclaim, and take profit 1 will be at another H1 consolidation period, which could be something like this. The issue with this setup is this H1 consolidation period. So this is a setup where it would be valid to take and perfectly fine, but I wouldn't necessarily feel too comfortable in the position until price was safely above this H1 consolidation period as well. Another potential long setup is going to be a long based on the H1 consolidation period just below the equilibrium. If price were to fall down within this region, not give a short trigger that I talked about, that's fine. A potential long will be on a retest of this H1 consolidation period. I have the confluence of the equilibrium there as well, which is great. So I would look to enter into a long position. The invalidation would be the low of the consolidation period. Take profit 1 ideally would be within the range high, because when you're trading a range, if you're taking trades based on the equilibrium, your first take profit, you want it to be at the extreme of the range. You never want to assume the range will break. So what would make this invalidation better is if price were to fall below the equilibrium, then reclaim the equilibrium, then your invalidation point can be the low before the reclaim, make it a bit tighter instead of the low of the consolidation period. Okay, that's why it's very important to have a very strong invalidation point. And really the last potential long scenario I see is going to be a long from the range low. So the range low is not a level where I would necessarily set blind bids, just because this exact range low is still kind of up in the air in terms of how strong the level is. I do have high time frame confluence with this range low, which is great, but I wouldn't necessarily knife catch the range low. That's just my personal opinion. Usually I like to wait to see a reaction from a level. So in the event of a move down to the range low, I would not be opposed to a long setup where price falls below the range low. We have several H1 closes below the range low. Price reclaims the range low. My trigger will be on the reclaim of the range low. My invalidation will be at the low before the reclaim. And my take profit 1 will be the EQ. Take profit 2 will be the range high. Take profit 3 will be somewhere higher. That's a scenario for sure. Alternatively, if we don't have a move down to the range low, it would be perfectly fine to see several wicks into the level. So if we just see a strong wick into the level, or if we see bodies into the level but no closes below the level, that to me would show that this level is actually valid and actually going to be a strong level to base an argument from.